Welcome back to the afternoon session of Digital Banking Summit. We start with a panel on challenging banks, the future of neobanks and open banking. The panelists discuss the elements of this new norm and explain how the ecosystem shapes up. We will have Nasir Zubairi from the LHoFT, Conan from Institution of International Finance, and Deniz Güven from Moxbank.
Hello everyone, my name is Nasir Zubairi. I am the CEO of the LHoFT Foundation in Luxembourg. I am here today to moderate this panel on neobanks and open banking for Istanbul Fintech Week. I have two fantastic panelists with me today. And if I just would turn to them, I'd like for them to introduce themselves to you so that you get a flavor as to who they are. Deniz, maybe we could start with you.
Sure. First of all, thank you very much for having me here. Deniz Güven, CEO of Moxbank in Hong Kong. We are part of SCB Group, Standard Chartered Group. Moxbank is owned by Standard Chartered plus Hong Kong Telecom plus Trip.com. Previously, I was working, in Standard Chartered, covering 32 different markets.
Fantastic, Deniz. Thank you very much. And Conan, tell us who you are.
Hi, I'm Conan French, and I'm Senior Advisor for Digital Finance at the Institute of International Finance, which is a global group of banks, asset managers, and insurers from 76 markets around the world. And missing being together on the shores of the Bosphorus, but I'm very pleased to be back for this new digital edition of the Istanbul Fintech Festival.
So a fantastic and worldly panel. We have all continents here represented, or the three main ones. So thank you both for joining us across these time zones. Let's kick this off. There's a lot of excitement in the world at the moment around neobanks, challenger banks, and the potential they hold for advancing and changing the financial services sector. COVID-19 may or may not have helped to advance these potential opportunities. Let's hear from you, Deniz. How setting up and running a challenger bank out in Asia, obviously a little different from Europe, but tell us how it's going, what the opportunity is, and how you see yourselves and others taking advantage of this.
Sure. When I look at Asia, also in Hong Kong, there are a lot of difficult markets in Asia. Hong Kong is one of them. When we look at Hong Kong, there are a lot of big players. Some of them are local, some of them are global players. Especially when I look at the first tier, there are really strong players in Hong Kong. And Hong Kong as a market, I think from product standpoint, you can see all the products in Hong Kong. It's easy. So which means, from product standpoint, it's a very mature market. However, if you look at, from service standpoint, it's a bit difficult, to see, the end-to-end, services in Hong Kong. So there are a lot of opportunities, for Standard Chartered. Hong Kong, it's actually, we have a huge franchise in Hong Kong, and it's a very profitable franchise, for Standard Chartered Group. But honestly, our starting point, was quite different. Everything, kicked off here by the regulator. So when we look at some other markets like UK, it started quite differently. But in Hong Kong, regulator started everything. 2017, they said, okay, we are going to issue virtual banking licenses in Hong Kong. And after that, we assess the opportunities, pros and cons for Standard Chartered. The most important question was for us, if we are not going to cannibalize ourselves, who's going to cannibalize? Because the threat is totally different in Hong Kong. I can see China easily in the mainland from my place right now, and there are a lot of big tech fin players coming from China. If they will come here, can we defend ourselves with our existing model, or can we attack this market with our existing model? I think that was starting point. And then we look at different things. Question?
No, I was just going to quickly. I mean, what I find interesting about your neobank is that you are backed by a traditional institution. How much does that contribute to building the trust that sometimes these challenger banks and neobanks may suffer from in terms of building market share?
I think you are touching a very important point. I think it's the most important point, right? We are in trust business.
Yeah.
We are a bank. We are not a tech fin, or we are another fintech. I always share this. We didn't build something for like a small fintech player. We are a bank, licensed bank in Hong Kong, and trust, it's our business. So that's why it's a very critical point. I think backed by a very traditional bank, backed by a big Hong Kong telecom company, it's important. Why? Because people, they trust us. Why? Because we are backed by really strong players. But on the other hand, what we built here is a bit different. Mox is one of the first cloud-native, cloud-based bank in Asia right now. So we didn't use any technology, any tech stack from Standard Chartered or any other groups. I think this is super important. I'm underlining technology, but technology was not the most important thing for us. We focus on the real needs and the motivations in Hong Kong, and we try to understand, how can we differentiate in this market. The interesting thing is, in the market, I can give one example, and then I will pause. It's a year ago in Hong Kong, there are more than 170 banks, in Hong Kong, and the population is 7.4 million. And it was really difficult to open a bank account in Hong Kong. If you are lucky, you can open a bank account, in 2-3 days, if you are lucky. Today, actually, last week, one of our customers, he opened an account in Mox Bank less than 3 minutes. So I think understand this, and when I say open a bank account, I'm not talking about the prepaid card. I'm talking about a bank account with a card with entire functionality set. So I think this is super important. If you can understand the real needs of the market, you can build new services. And I believe that building service-led bank is the key thing, instead of building new products with different colors. This is what we did. We launched the bank a month ago. Right now, we got more than 35,000 customers in 1 month time, and there are a lot of different good stats. But let me pause here.
Okay, thank you, Deniz. So we'll come back to some of those points you've made. Conan, from your perspective, how do you see the global landscape shaping up and the opportunity for neobanking? And let's talk a little bit about open banking as well and the potential there.
Thanks, Nasir. And yeah, open banking, I think, along with some of the other trends that Deniz brought up that they're focused on in Mox Bank, are really some of the global drivers that we see. As with the digital banking license in Hong Kong, we see a similar regime in Singapore. As he mentioned, the UK market saw a boom in digital neobanks for slightly different market reasons. But there was a clear signal from the government and the regulator that they wanted to see new competition and new market entrants, and they really worked hard to create those conditions. So I think that government interest and expectations in growing customer bases, broadening financial inclusion, making things more accessible has been a big driver. Of course, the technology and customer expectations set both within financial services and outside has been another big global driver that we've seen. Deniz mentioned a few things that are also consistent in what we've seen around the world, and that is a real focus on customer need and customer expectations. So that idea that setting up a bank account shouldn't be a multi-day, long, laborious process that requires you to make trips to a bank, but instead with a few clicks and a few minutes, you can do it from wherever you are and be up and running using those new technologies, new digital identity technologies, a clean tech stack to make that experience sort of what customers expect. And then I think that theme of technology being a necessary starting point, but not sufficient. It's not just about the tech, it's really what you are building and enabling for the customer with that technology stack that you've built. So those are some of the things that we think stand out in neobank trends around the world.
Okay. Conan, I mean, there's an interesting dynamic, obviously, if I'm sitting here in Europe and be it that the UK technically is still part of the EU, with the negative interest rate environment and the general dynamics of a lot of the challenger banks that have sort of set up in Europe, big questions are being asked about the sustainability of these institutions around their unit economics. Many of them claim to have next to zero customer acquisition costs, which we all know to be slightly stretching the truth somewhat. But yet, you know, when you're dealing in a negative interest rate environment, the deposits are costing them if they can get hold of them. They're still building up their debt books or their credit books, let's put it that way. How long do you think some of these institutions can go on, and do you think they can survive?
It's been a really difficult year for new banks who have entered the market. You see companies that are not exactly a bank, like Revolut, under some models of stress, and similar Cabbage, which was a great SME lender in the United States, ran up against a real brick wall of challenges in early March as COVID hit. Their customer base had operational challenges. They had challenges in the capital markets, and ended up in a sale to American Express. So I think it's been a really challenging year. I think, as you said, some of those assumptions about operating costs, customer acquisition costs, running into challenges on AML, KYC, all of those things that you know, are banking. These are banks, they're regulated entities, and they have to have the same compliance processes that everybody else does. And, you know, as a result, I think that you see some headwinds from the combination of fixed costs, rate environments. But the things that they have right, with thinking about customers, rethinking the base need of financial services, may help them see their way through. So if you think about a future of embedded finance, closer linkages to things like shopping, you know, Deniz sits in Hong Kong with a front row seat to the mainland China model of what Alibaba and Tencent have built. And I think that neobanks may be more agile, and they certainly have the technology stack where they can do things more quickly and experiment a little bit. And so that may be a path forward for them.
So, I mean, Deniz, I mean, let's go back to this point of the trust element here, and the fact that you do have these big institutions backing you. I mean, you talked about the competition from China. I mean, Alipay has a big brand, as does WeChat, right? In the UK, we've seen Goldman Sachs enter the market and actually do very well with their Marcus product, as I think they have done in the US. Aside from the trust to build on the customer base, I mean, tell me if I'm wrong here, but you know, in Europe, under the European banking system, we have the deposit guarantee scheme. So customers of a regulated bank have some feeling of certainty that their deposits are guaranteed up to 100,000 euros. I mean, I don't think that exists in Hong Kong or in other countries. Do you think that therefore the right model in other parts of the world, or the most successful model, will be this one where existing entities or entities with brands develop new challenger institutions? Or do you think something completely fresh can rise and challenge the existing order?
Yeah, now, first of all, it does exist in Hong Kong as well. Okay, you know,
yes, okay.
Very, very similar limit, you know, in Hong Kong as well, you know, up to, you know, 500,000 Hong Kong dollar, which means, you know, 75, 80,000, you know, USD. There's a deposit protection in Hong Kong as well, in many markets, also in Singapore. That's something, you know, important, of course, you know, coming from the you know, it's like, you know, the banking governance, right? You know, coming from the regulator. But on the other hand, you know, you have to give this, you know, trust and, you know, the comfort, you know, to customers in a different way. Because most of the people, you know, when we ask, you know, in Hong Kong, you know, or different markets, people, they don't know, you know, this kind of, you know, protection schemes. So it's an interesting thing, you know, they don't know. Of course, you know, competition, it's going to be different here. There are 8 licenses here. Right now we got, you know, they were, you know, 8 licenses, but right now we got, you know, 8 neobanks in Hong Kong. I'm saying, I'm calling them, you know, neobanks. I'm not going to call them, you know, neobanks, challenger banks, or whatever, you know, digital banks, because I don't believe that, you know, this is the right approach. What I believe, you know, these new banks, you know, they're coming with the new operating models. So these new operating models, you know, future operating models will change the, you know, banking. And from regulatory standpoint, you know, from products, services, profitability, I think, you know, it's going to be different. When we look at Hong Kong market, yes, as you said, Ali, Tencent, these guys are here already. Plus, I think there are 6 players came from China mainland, one from Hong Kong homegrown, and one Mox Bank, backed by Standard Chartered, Hong Kong based, right? When I look at all these players, the smallest one, they have 220 million customers in China. Okay, so they know how to scale the business. They know how to make money, from the business. So because when we look at, of course, we are discussing, one side, UK, Europe, especially the Neobanks, Monzo starting, many of them actually, they are struggling, to make money. Why? Because also, the investment money, VC money is quite dry, and it will continue like this, for a while. But on the other hand, it's really difficult to make money. Why? Because honestly, if you want to make money in banking, the most important thing is, first, you need to put, the basic products immediately, help the customers, get the hard share, and instead of market share. But on top of it, bring, new products, in a contextual way. So in China, what's happening right now, honestly, these guys, they have a huge scale, but they are bringing, borrowing functionalities in a different way, in a very contextual way. Okay, they are not trying to sell a normal personal loan to their customers or normal credit card. But if you are not going to give credit card or loan products or wealth products, you cannot make money. It's impossible. It's really difficult. This is banking. Honestly, in banking, you cannot make money without this kind of products or services. But in our it's actually we have future operating model. In the future operating model, we want to serve all these products and services to our customers in a different way. So if we can find these different ways, then we can change the market. One example, so cashback. Everybody's giving cashback. Everybody's giving coins, points, etc., etc. But do you believe that you can see all the points and coins or whatever they are transparently? You need to wait minimum 45 days, 46 days, and you need to check it from your statement or etc. Right? What we are doing here is a bit different. We are giving cash immediately, real time into your account, and we are changing the mentality. While you are saving, you are thinking about future spending. While you are spending, you are thinking about saving, and we are connecting the products and services together. And customers, they love it in Hong Kong right now. I think this is part of when we talk about future operating models, we have to think differently. This is only one example which supports the future operating model.
So Conan, I mean, obviously we talked a bit about China here, and clearly there we have seen the big techs take a big foothold in the financial services arena. What are your thoughts in terms of open banking generally, and I think some of the regulation, for example, in Europe, such as PSD2, as an enabler for the big techs to come in and challenge the traditional order? Do you see the likes of Google Bank, Facebook Bank, or as Libra potentially as their payments operation, and Amazon as a distribution channel? It seems that they don't want to become a bank. Do you see these guys taking a strong, bigger sort of foothold in the financial services arena?
Well, I think it's a good, that potential is a good example of some unintended consequences of the regulatory framework in Europe. I think when PSD2 was incubated, you think about the long gestation cycles for regulation and supervision. And when PSD2 was originally thought of, I don't think that big techs were, it was really competition that was driving it and opening up that bank data, and they didn't really stop to think about what a global, omni-service digital platform could do. So I do think that in Europe there is at the moment there's an asymmetry between open banking, opening up the banking data, but no ability to take some of that data that's locked up in the big digital corporates and have that inform products and services the other way. So I think that that's something that in frameworks like Europe's would be good to see as a much freer flow of that data across different sectors of the economy, and of course across different jurisdictions. Data is very different than any other asset type, and the ability to tap into it to give customers better products, better insight, better real-time information, products and services like Deniz just explained, of those value points across cards. And those are the things that we think banks of all kinds, neobanks, traditional banks, should be free to really compete and provide those kinds of services as customers really start to think about these financial services more embedded in their daily lives and their activities on their phone rather than as a standalone distinct activity.
Just a quick follow-up question. I mean, not just in Europe, but I think a global initiative with the rising influence and power of FATCA in terms of AML and anti-money laundering, be it compounded by the negative interest rate environment in Europe, that banks are now not willing to open bank accounts for people. It's getting harder and harder.
It's a real challenge.
For neobanks as well?
Yeah, I think neobanks are banks. They're all beholden in the same KYC, know your customer, and AML, anti-money laundering requirements. We think it's a real challenge globally. Unfortunately, despite best intentions and best efforts and billions of dollars being spent, we're catching less than 2% of financial crime through the current systems. We at the IF would like to see much better data sharing, much better feedback loops from these financial crime units. And so it's a real cost. It's a responsibility banks of all kinds are going to continue to carry on. It drives customer experiences that aren't great. Deniz and his bank have done a good job of changing that customer onboarding process, but for a long time, it really required doing something like taking a national ID down to a bank branch and taking an hour or two to stand in line and open something up. So we're pleased to see evolutions. We think that the future of digital identity offers a lot of promise, and we hope that global standards for things like AML and KYC keep evolving so you don't see that de-risking and sort of unbanking that you had referred to there that we're very concerned about.
Okay, so look, I think we're coming to the end of our time today. Maybe just as a final question, I'd like to get both of your views. Let's start with Deniz on, having set up a bank. What would you say is the A1 critical element of building, or the foundational element of building a challenger new institution in the financial services arena?
I think the fundamental thing is you need to find the right talents and the right people. Okay, it's not about technology. You can find best technology. Again, as I said, we are entirely cloud native. There is no physical server in this bank. Zero. Okay, and the thing is, you can find best technology. You can find best AML solutions, FCC solutions, and everything. But if you cannot find people and those talents, and especially sometimes it's really difficult to find the talents, right? In Asian markets, it can be really difficult. So for me, fundamental is find the right people, right talents, bring them together, and then they can build everything.
Okay, fantastic. And Conan, for you, what would you say would be the critical element for building a new bank?
I would agree emphatically. We've done a survey over the last year of digital transformation in financial services, and over again, that question of talent and culture of the institution has come up. They sound fairly simple and basic. With talent, I think we see the ability for banks of all kinds to compete for talent, but retaining talent, having them feel like they can use their skills with data, access the right data, setting the right environment for them is really crucial. So strongly agree. It's talent, and technology is of course necessary, but not sufficient.
Okay, I'm going to sneak in one last bit to follow up from this. If I was to give you 50 million to set up a new bank, where in the world would you do it? Conan?
Probably Singapore today.
Okay, and Deniz, are you happy in Hong Kong, or would you choose somewhere else?
I think I see still a lot of potential in Europe. People, they believe that it's a very crowded market with traditionals and new banks. Unfortunately, there are a lot of opportunities for niche and different verticals in Europe. But if you ask my opinion in Asia, There are a lot of opportunities in Bangladesh, Vietnam, Malaysia, Indonesia. All these markets, they are huge markets. The smallest one has 175 million people. I think if you can find the right niche with 50 million, easy. I think you can build the best bank.
No, I think I'd agree with both of you. I think Asia is where the big opportunity is, the scale of market, European market with the fragmentation right now. It's, be it that we are the European Union, the fact is that transposing a business across regulators, across countries, across cultures is still quite tricky. Gentlemen, Conan, Deniz, thank you so much for being with us today, and thank you all for watching. We very much appreciate it. I hope you enjoy the rest of Istanbul Fintech Week.
Pleasure. Thank you.
Real pleasure. Thank you.